there, and welcome back to the Start Virtual Series, the podcast that helps you take your business to the next level. This is episode 7, and today we're diving into something that we all love to hate, tax season. But don't worry, we're not here to overwhelm you. We're here to help you turn tax time from a headache into an opportunity. You know, tax season doesn't have to be a nightmare, especially for real estate investors. With the right preparation and with the right help, you can turn tax time from stress into strategy. And in fact, today, we're bringing you your complete survival guide to navigating taxes for your real estate business. And to help us do just that, we have a true expert with us today. You know
Hi,
her,
everybody.
the queen of bookkeeping and the co-founding director of Start Virtual Bookkeeping. Please welcome Tony Counts. Hi, Tony.
Good morning, good afternoon, whatever time it is as you're listening to this podcast. Welcome. And like Daryl said, we're here to talk about taxes and bookkeeping for real estate investors. And you're right, it is something that we all love to hate, but it's definitely one of those necessary evils, and it's just something that, you know, it's got to be handled. You can't just put it on the back burner because eventually it resurfaces and it comes to bite you really hard.
Agree. And we're really excited to dig into this with you, Tony. So let's start with the basics. What do you think is the first thing that every real estate investor need to keep in mind when it comes to tax season?
All right, I can think of a few things, but most important, which I think is one of the really basic foundations of setting yourself up for success, is making sure that you're using a separate business account from your personal account. I see this so many times where, you know, real estate investors, and I get it, you know, we start our businesses fast. Maybe there's already a deal in the pipe and you're rushing to get your LLC started. But a lot of people think that it just stops at forming the LLC, and it doesn't.
Right.
Like, once you form that LLC, you have all the necessary documents to go open a business bank account. And I know it's dreadful to have to go to the bank, make an appointment, sit there for 30, 45 minutes to open your bank account, but it's super important because it's going to set you up for success from the beginning. So many times we onboard new clients and we hear the same old story like, oh, I've been running everything through my personal account for the past year, but I know, you know, what's business and what's personal. That's great, but your bookkeeper doesn't know what's business and what's personal. So that means that we're going to require a lot of effort from you to get things organized and separated. So right from the beginning, open up your business bank account. Do not delay and start using it just for business purposes.
Love that. That's a great tip. And yeah, that's the common observation that we are seeing when we onboard new clients, especially with real estate investors, right? Do you think that that's the reason why real estate investors hate tax season so much as well? Like, that's one of the
yes, definitely. Because I think another thing that they don't think about is, especially our fix and flip investors, right? So they're buying properties, they're renovating them, and they're selling them all within a short time frame. So if they let the bookkeeping go with nobody touching it, nobody organizing it, and then they're to the point where, like, wow, I need somebody to help me sort through this stuff. Now, on top of figuring out what's business, what's personal,
right,
we have to also figure out which expenses are for which property. Now, you can imagine if somebody did a fix and flip 1 year ago, let's say we're in September 2025, all right? And this actually just happened with a client that we onboarded in our backlog special. He had a fix and flip that he did in February of 2024, and then another in April, another in May. So just these back-to-back flips, right? So now we got to start asking, you know, when we see Home Depot and contractor payments and things like that, we got to start asking, like, what properties were these for? So not only are we needing to know, is this a contractor payment, but we also need to know what property was the contractor payment for.
Exactly.
So imagine having to think back 12 months and you went through 3 flips in a 3-month period. You can't really, like, it takes a lot of memory to figure out, gosh, which property did I have this contractor at? Or did I have them at all properties? Which one is which, you know?
Backtracking all of that is definitely going to be a nightmare for sure, especially if you're not organized at first. And you always mention this, I always hear this in other podcasts that we had, you do mention that real estate bookkeeping is a completely, different animal. And when you're able to, to overcome the challenges in dealing with the real estate bookkeeping, then you can be confident to work on other industries bookkeeping as well. So can you tell us more about that? How is real estate different?
So the reason that real estate is different is because the IRS looks at each property as like its own mini business. So even though like your business owns these properties and is like rehabbing them, renovating them, fixing them up, even if you keep them as a buy and hold and you have to renovate it at first before you can rent it out, like when you do your taxes, like each property is looked at as if it's its own business. So you have to know like how much income and how much expense per property. And a lot of real estate investors don't understand that, and they sometimes want us to just put it all here, put it all there. But if we do that, it's not the end of the story. Like you get that to your CPA and they're going to ask you the same thing. Well, we have to have it all separated out. We can't just throw everything on one property and nothing on the others. So
that makes sense.
So yeah, that's how it's different, is because not only do we have to categorize everything to the chart of accounts as far as like income and expenses, but now we need to know income and expenses per property. And that's for fix and flip and for rental properties. If you buy a rental property that needs some renovations before you can rent it out, all of this is really important because those renovation and rehab costs, like those increase the basis of the asset. And this is only for buy and hold. So fix and flip, it's not really a fixed asset, so you're not going to get depreciation on a fix and flip, but you will get depreciation on a buy and hold long-term rental, something you're going to hold long-term. So if you buy and this is what real estate investors do. They find a property, they pay 60 cents on the dollar, and then they put in some money to renovate it, get it to a nice market value, and then they can rent it at top dollar. But all of the renovation expenses that went to that rental property, those increase the basis of the asset. So if you paid $100,000 for a property and you put $50,000 into it before you could rent it out, now that property on your balance sheet is worth $150,000. And one of the most common mistakes I see is that those renovation costs, if a real estate investor is doing their own bookkeeping and they don't really understand this part, they're putting those costs directly to the P&L. And what happens when you do that is now you're overinflating your expenses and you're always going to look like your business is not profiting. But that's because those renovation costs, they don't belong on the P&L. They belong on the balance sheet. And the more you can increase the basis of that asset, the more depreciation you're going to get on that.
There you go. I think one part of our episode 5, you kind of touched that as well. So that's very enlightening, right? So now we know. And how IRS looks at every property as a completely different business. So that's really important to understand to help you have the right reports and the right valuation as well for your business. Thank you. That's really helpful. So if I'm a real estate investor, Tony, what should I be saving throughout the year?
That's a really good one too. So definitely you want to save, like when you're buying properties or selling properties, you want to save all of the documentation regarding that transaction. And I see this so many times too. And actually, some of your very, very high level people that everybody looks up to, not going to say no names, but when I first started doing their bookkeeping and I started asking for all of these settlement statements, closing statements, they said, I didn't know I had to keep them. I just crumpled them up and threw them in the backseat of my car. So then I had to start calling the title companies and trying to track down HUD statements from like 1-2 years ago. And guess what they did? They don't want to help you because a title company works on deals that are going to generate money for them. So if I'm calling them asking to look for something from 2 years ago, they're like, bye.
It's going to eat up their time.
We don't have time for you. We're closing deals today.
Of course, we're going to focus on things that would be valuable to their business too.
Exactly.
So
like who wants to go look for something from 2 years ago and they're not going to get any, commissions from it. So
I can imagine what you went through, trying to recover those.
Yes, it was a nightmare. It was a nightmare.
For sure.
But yeah, definitely save all the transactions to do with your property purchases or property sales. And that includes like if you're getting private money loans, if you're getting, any type of outside funding, if you're taking over a mortgage sub-2, like we have to know everything in order to put the pieces together properly on your books.
That makes perfect sense.
Yeah. I just actually had someone reach out to me on Facebook that a real estate investor doing his own bookkeeping, and he sent me a message like, hey, Tony, I got this property and I'm trying to record the mortgage payment, but I don't know where to put it. And I said, all right, well, when you bought the property, did you record the journal entry recording, the property purchase? And he's like, no, I didn't. I said, well, that's why you don't know where to put the mortgage payment, because if you would have did that, you would have created the beginning balance of the mortgage on your balance sheet, and then you would know where to put the mortgage payment when you paid it.
So I feel like it's really helpful if you have like a bookkeeping service like Start Virtual to,
Sure.
keep you organized. And,
Definitely.
we'll always reach out to you and try to get all these documentations, all these receipts,
Yes.
all these invoices and all. So how do we usually do that if they are interested to take advantage of our service? How do we make sure that they're, up to speed with all these things?
Well, first of all, when we onboard a client, our onboarding process involves a questionnaire where we're going to learn more about your business. Like, are you fix and flipping properties? Are you a landlord that owns a portfolio? Are you wholesaling? So once we get the answers to those, then that's going to tell us what documents we need to make sure to look out for and to request. Right. And also, as we're going through the bookkeeping, usually any type of property transactions like purchases or sales, they're done by wire, and they're done to wire title companies. So we know when we're looking through, the items that we need to categorize, if there's a wire and it's some odd amount, that it was definitely a property purchase. So that just triggers us to ask those questions. Because a lot of times real estate investors, they don't know that they have to send this information to their bookkeeper. They're too far out there just closing deals and looking for the next one, that they don't think about all of this stuff on the back end. And that's why it's important to have somebody like a bookkeeper from Start Virtual, because we deal primarily with real estate investors. I would say about 80% of our clients are real estate investors.
That's true.
As we all know, real estate investors, before they get into that niche, they already have existing businesses. So we're able to capture the bookkeeping for those existing businesses as well. And just like you said, bookkeeping for real estate investing is definitely something that is a little more complex than just bookkeeping for a service-based business.
Exactly.
So if we have bookkeepers that can handle bookkeeping for real estate investing, then we can handle bookkeeping for any business out there.
And I think the common misconception as well is, when you already have an idea how to do your bookkeeping, on your own for another business, it's going to be the same thing with real estate. If you're going to start a new real estate business, or you're going to start venturing to real estate, but it's not.
Yeah.
You did
People learn it the hard way.
Right. So you need someone to help you for sure. So you can still focus
definitely
on really growing your business.
Yes,
perfect.
For sure.
And when going back to tax deadlines and stuff, when should I start getting my tax stuff together, you feel?
So I always say the earlier the better, because we're in September right now, and we have the extension deadlines coming up. We've got one on the 15th of this month, and we got one on the 15th of next month. So when you wait to this time to start thinking about reaching out, chances are you're going to find that it's not going to go as quickly as you think. And that's another big misconception, is that people think that, oh my gosh, I'm going to hire a bookkeeper and they're going to get it done in 2 days. And that's not true, because if you find a bookkeeper that gets done in 2 days, I would definitely be cautious of the tax return that gets prepared for you.
Good luck.
Because I'm telling you right now, you cannot get a full year of bookkeeping done in 2 days for somebody that's actively investing in real estate, because that requires meticulous detail.
For sure.
Definitely, as soon as you start purchasing properties, let's say this was your first year, Daryl, you have a real estate business and you were doing some fix and flips. Let's say that, you've been trying to get your first deal and you finally got one in March of this year. All right, so you purchased the property, you're starting to add, rehab it so that you can sell it for a higher amount. Once you purchase that property, that's when you want to start reaching out for a bookkeeper, because the longer you wait, the more work and the more headache it's going to cause you, because
100%.
You don't realize that everything that you're doing for this one property, it has to be organized and kept for that property. And in addition to that, you're going to have your average, operating expenses, your lead generation softwares, paying your virtual assistants, things like that. So all of that, it has to be organized in a way that your CPA is going to be able to prepare your tax return. And this is going back to the person that we just onboarded with the backlog. solution offer that we have, he didn't remember a lot of the stuff that he did, because this is we're talking about a whole year of activity of numerous like fix and flips, lending here, lending there, getting private money loans from people, paying them back, paying interest payments. Like, he didn't know what a lot of the stuff was, and he was saying, well, can we just put it here? Can we just put it there? But when you do that, like, they don't realize that it's not the end there. Like, because if it goes to your CPA, they're also going to question it too.
Right.
So it's not you can't just stick it
It's
somewhere
gonna be
and
a
just
rework.
like, okay, we're done. No, it's going to resurface again when your CPA gets hold of it.
It's unnecessary rework that we don't want to go through, for sure.
Yes, definitely.
Yeah, you're right. I mean, remembering past months transactions is already hard enough to remember. What more, a year, 2 years, 3 years?
Exactly.
Right?
Yes.
That makes perfect sense.
So yeah,
And-
back to your question, that's what you want to do. Like, once you start actively doing deals in your business, you want to look for a bookkeeper right away. And if that's not in your budget, at least what you can do that is no charge, when you start making all those purchases for the renovations or the rehab, save them on a folder in your computer. Like, create a folder that's just named the property address, and everything you do for that property, just store it in that folder. That way you're not stuck at tax time having to look through every transaction and try and figure out what the heck happened.
That makes sense. So create a separate folder per property. And what usually are the paperwork that needs to be kept in those folders? So they have
it's
an
going to
idea.
start with the closing statement. And then let's say this is a fix and flip. So you purchase a property, you're going to get the closing statement. Maybe you got a private money loan for the rehab. So that loan document needs to go in there, the promissory note, the terms of that loan. Any purchases that you start making to rehab that property, like Home Depot receipts, contractor receipts, W-9s for your contractors. Anything that you could possibly think of, utility bills, property taxes, everything to do with that address goes in that folder.
If you're unsure, just dump it there.
Yeah, exactly. Yes.
Right? I mean, it can be useful. I mean,
if
we
it
can
references that address, it goes in that
There you
address's
go.
folder. Even if you let's say you took one of your contractors out to lunch, or you brought them lunch, because they were doing such a great job, that's an expense, and that should go in that folder.
That makes perfect sense. Yeah. All right. So how about what are the biggest tax break that most investors miss?
I would have to say that so going back to where a lot of people get stuck in that habit of using their personal account for expenses. And I get it, we start our businesses, we just default to the account that has the money, right? So sometimes real estate investors, like, they have their subscriptions auto renewing through their personal account, even after they start using the business account. So I think some of the biggest deductions they miss is getting some of the stuff off of the personal account into the business account. Because a lot of everyday transactions can be business expenses, and a lot of times investors are missing that. Just like I said, showing up to one of your fix and flips and bringing a contractor lunch, like, that's a business expense. Let's say you are attending a mastermind that's going to show you how to be a better fix and flipper, and you pay for it out of your personal account because that's where the most money is. That's a business deduction, because that's continuing education. You're furthering your education as a business owner so that you can be a better business owner. So those are big deductions that are missed by real estate investors, and also just, not properly doing the bookkeeping for real estate investing, because I've seen some pretty big disasters, like sometimes real estate investors, when they purchase a property, they also get a private money loan at the same time so that they can get excess funds when the property closes. So you purchase a property, and when the closing takes place, you get like an extra $23,000 in your account because of the way you set up the transaction to have a private money lender in there, and then they use that money to rehab the property. But when a real estate investor doesn't know how to properly do the bookkeeping, and the excess funds are deposited into the business bank account, a lot of times they're recording that amount as income. And it's not income, it's a loan.
Right.
So that's huge, because if you record it as income, we're taxed on the net profits of our business. So if you're recording a loan as income, you're going to pay more money in taxes.
Good luck.
You're just going to you're going to line the IRS's pockets for no reason. And they love people like that.
And definitely you want to save money. So what are other tips that you can share that can help them save money as they manage their bookkeeping?
So
aside from hiring an expert,
yeah,
since our
I was just
virtual,
about
that
to say
can
that.
save.
Like, I know it sounds crazy because it's adding an expense to your business,
Right.
but having that expense of a bookkeeper on your business is ultimately going to save you money because you're
Worth
not
it.
going to miss any of these tax deductions. Like we know what's deductible for your business, and it's going to be different for every line of business. You know, I always like to use the analogy that, you know, I have a bookkeeping business, so there's certain things that I can deduct as a bookkeeping business owner. Things like software or paying a virtual assistant. I can't deduct things like repairs and maintenance because there's nothing for me to repair or maintain as a bookkeeping business owner. So, but we have our clients that are they own properties, so they're landlords. So those type of businesses, you can deduct repairs and maintenance because sometimes things go wrong at the properties and you have to send a contractor to go fix it.
Mm-hmm.
And going back to, you know, having a great bookkeeper is we know what your business can deduct, you know, so we're going to make sure that we're capturing all those for you so that you can save money on your bill. And if anyone out there doesn't know the what a tax deduction does for your business, it reduces your taxable income. So imagine that your business makes, let's say, $10,000 for 2024, right? But in order for you to make that $10,000, you had to spend $4,000. So without spending that $4,000, you wouldn't have been able to make that $10,000. That's a business deduction, and that's going to reduce that $10,000 income now to $6,000. So now you're getting taxed on $6,000 rather than $10,000. So that's why it's really important that you're capturing all those business deductions so that you can lower your tax bill.
100%. And you can use it for other important expenses like marketing or anything that will help grow your business.
For sure, yeah. Yeah, and that's another thing. If you don't know how your business is doing on a monthly basis, how do you know how much you can put towards marketing?
Exactly.
You don't know that, you know? So there's a lot of things that you could miss. You know, if you know that if you have a bookkeeper and you're seeing how your business is doing on a monthly basis, and maybe that tells you, you know what, I could probably add $1,500 more to my marketing budget, and that $1,500 more to your marketing budget is going to bring you like 3 more deals, you know? So it's just kind of like a cycle. But in order for you to have that confidence to say, I can put $1,500 more to my marketing budget, you have to be able to know where your numbers are on a monthly basis.
Totally agree. That's really helpful.
Yeah.
Based on your experience and, you know, with the clients that we service right now, are there specific like apps or tools that's really helpful on top of course, making sure that you have your QuickBooks account? And I'm pretty sure you have a lot to share about how to properly use QuickBooks for your business. But what are the usual apps or tools that can really help with all these?
So I like to, especially for the fix and flip business owners, I think Slack or some type of tool like that where you can create channels is great.
Yes.
Because what we would do is we would create channels for each property address. So this is almost like just creating that folder and putting everything in there. But you can create channels for your property addresses, and you can add all the necessary team members in there. So you can add your bookkeeper, transaction coordinator, private money lenders. Sometimes your private money lenders, they want to be in there to kind of like see the progress and every phase of the project. It's you know, exciting for them to see how their money is helping this project. So yeah, I think Slack is a great tool if you're doing fix and flip, creating a separate channel for each address, adding the necessary people, because now that also cuts out questions. So if you have your bookkeeper in your Slack channel and you're constantly dumping like receipts in there or statements, things like that, your bookkeeper's gonna go in there and access it themselves without having to ask you for it.
That's perfect.
So that's a great tool. Also, if you're paying contractors, a lot of times as business owners, we don't really understand the importance of collecting a W-9 from somebody that's doing work for our business. Using a platform like Gusto, Gusto, you can pay contractors through there. And the good part about that is that it's a self-onboarding platform. So if you, let's say, you know, Daryl, I'm going to hire you to help me in my bookkeeping business and I'm going to pay you as a contractor. So I would send you, I would collect your email and send you an invite to Gusto. You would get the email, and then you would fill out your W-9 and your direct deposit information on your own. And then it will let me know that you've already completed the registration. So then I can start paying you directly through Gusto. But the best part about it is that at the end of the year, when it's time for me to issue your 1099, all I have to do is go in Gusto and click a button, and your 1099 just goes directly to your inbox.
Wow.
So it
That's
handles
super neat.
everything for you. And I really like that platform for paying contractors. I don't really like it too much for actual payroll services, but for paying contractors, it's a
Contractors,
really
yeah.
great tool.
Sounds great.
It keeps you
Perfect.
professional too. You know,
Yeah.
it makes you look like a professional instead of like, sending someone a Cash App or a Venmo,
Exactly.
And those are definitely harder to track too, because back to the client that did our backlog solution, he had tons of Venmo charges and he had no idea who he even paid and what for. He's like, well, can you put it here? Can you put it there? I'm like, all right, but I'm going to let you know that your CPA is also going to ask you these questions too. They're going to want to know if you sent 1099s to these people. We can't just fill up your contractor expenses and just forget about the 1099 because they will ask you.
You just really have to stay organized. Then these apps and tools are really going to help with that. And
right, for sure. And just knowing that, one transaction, it doesn't end there. Like it trickles into many other things. So you can't just stuff it somewhere and think that it's okay. Like it's going to branch out to something else and something else and something else. So it's like, if you just throw things places, it's going to come back and bite you. And I think a real estate investor can do it themselves if they have a background in accounting or finance, because then you already have like a little bit of knowledge about, like, let's say a real estate investor, they've got a degree in business and had to take a couple accounting classes. Possibly they could, figure it out on their own. But if somebody with no prior knowledge of accounting or bookkeeping or finance, and they just maybe they went from sales to starting a real estate investing business, absolutely not. I mean, and that's the hard truth. Like I've seen it so many times, like people come to us after they've gotten to the point of being overwhelmed, trying to figure it out on their own. And they bring us their QuickBooks that they created, and it's going to cost them more money for us to unravel and put it together than it would to just start over fresh from the beginning. So, and we've had to do that a lot. We've had to start over people's QuickBooks because it was just too far gone for us to even repair. I remember one time when we told somebody too, like, we can't use this QuickBooks, and he was like, are you kidding me? He's like, do you know how much time I put into building this file? I said, well, it is horrible. Like, all of his chart of accounts were set up as bank accounts. When you set up all of your chart of accounts on QuickBooks, like it defaults to setting it up as a bank. So if you don't change it to have it set up like as an asset or a liability or income or expense, it's going to put everything as a bank account. So he was like, I tried to pull a P&L and I don't see anything on my P&L, and I've categorized all my transactions. So I looked at the books and I was like, well, that's because you set up all of your chart of accounts as banks. So everything's showing up on the balance sheet. So he had a bank account called like pool contractor, repairs and maintenance, and they were just all bank accounts. And he was wondering why he couldn't see any of these expenses on his reports is because QuickBooks will default to setting everything up as a bank. And if you don't know to change those like settings, then that's what happens. So for somebody to try to attempt that, and take all that time and stuff, someone like Start Virtual is going to be able to do that in a fraction of the time that a real estate investor with no experience can. And you just have to ask yourself, like, how valuable is your time? Like, time is something that we can't get back. Do you really want to spend your weekends trying to figure out your bookkeeping when you have absolutely no idea how to do it? That's really not a good idea, so. And a lot of times people think that bookkeeping is this huge cost, like, oh my gosh, I don't have the budget for it, I can't afford it. It's really not. And the sooner you get your bookkeeper and your bookkeeping for your business, the less expensive it's going to be for you. If you wait and, accumulate 2 years of data and now you're like, crap, I didn't do my taxes last year, I got to do my taxes for sure this year, but I have 2 years to catch up. All right, that's going to come with some fees. But if he would have started the bookkeeping right when the business started, that's like really the least expensive time to jump in and get a bookkeeper. And one of the good things about our service is that I host a monthly Zoom with all of our clients. So sometimes, when we start doing their bookkeeping, it triggers more questions for them, like, can I do this? Can I do that? So I always encourage everybody to join the monthly Client Connect Zoom. That's where all of our clients get together. I usually have a topic of presentation, just going over, breaking down like a certain, maybe like a certain requirement or a certain deadline. I try to make it as simple as possible because I know bookkeeping and accounting language can be overwhelming. So I break it down as simple as possible. And it's also an opportunity to ask any questions that you have on your mind about your business or about your tax liability or things like that. And the best part, it's also a time for you to share any feedback that you're having with your bookkeeping team, because we purposely don't have any of our team on there so that you can share any feedback that you have with your bookkeeping team. Usually it's positive feedback, and we share that with our team as well, and they love to hear it. It just encourages them to do an even better job. Like, they love hearing the great feedback that, you know, that they're helping business owners to be able to be organized and to have those financial reports so that they can make better business decisions.
Wow, yeah. We've really unpacked a lot today. Thank you so much, Tony. It's been very helpful, very insightful, and I think that there's a lot of tips from this 30-minute episode that a lot of our viewers right now are gonna appreciate. And if you guys find this really helpful, if you feel like someone from your colleagues or someone you know would also benefit from this, and if you yourself feel like you need that help right now from a bookkeeping service or a bookkeeper, Start Virtual is here for you. So feel free to subscribe to our channel. You can also share this with any of your friends, colleagues who you think would be benefiting from this episode and from Start Virtual's bookkeeping service. See you on the next episode, episode 8. There's a lot more that we want to share with you on the upcoming episodes. So I'm hoping that you guys are liking this so far and that you also join us on our next episodes here, the Start Virtual series. Bye!